Talk a little bit about flexible commerce and projecting the future of commerce. And what we would like to do before we start is announce that those in attendance here are eligible for a drawing at the end of this presentation. We'll be drawing a projector. We're projecting commerce. We're going to give away a projector. So make sure that you give your raffle ticket after you fill it out. Give it to Sean.
Back there.
Back there, Sean, if you'll raise your hand. Great. All right, we're going to have some fun. We're going to talk a little bit about some of the findings that we have found. We actually partnered Cybersource and Payments.com. We partnered and we've done an index, and we've taken a look at what consumers and merchants, how we're doing with commerce. And so we'll go through that here in just a second. All right, so what we did is we took a look at over 3,000 consumers, over 3,000 merchants, and how we did over 2020 and 2021 with commerce. And so we're going to take you through some of those major findings. We also looked at those consumers and those merchants across 6 different countries. So not isolated to just US, but you can see the countries that we looked at. And so this really illustrated the importance of digital commerce. What we experienced in 2020 was a sprint to digital. With many of us, some merchants were prepared for what was to come in 2020, some merchants were not. And those that were prepared had the upper hand. Just a couple key findings. One was, we have found that digital is here to stay. It's not going anywhere. We found that the mobile device and payments, consumers love it. And you're going to see by some of these findings that the more you use your mobile device in the checkout experience and the payment experience, the more consumers love it and use it. So, first off, this is an illustration of the friction within the commerce experience. And if you look across the 4 different areas that we looked at, first off, just brick and mortar. Second, smartphone assisted with brick and mortar. Third, simply mobile native, just the mobile experience by itself. And then fourth, the online experience just by itself. As you look at these indexes, the climb is good. That means that there was less friction in each of these channels from 2020 to 2021. What we also learned is if you look at the mobile experience jumped over 26 points, the highest of all of them. But also too, smartphone assisted and brick and mortar went up 49%. So great findings. And what we're also finding is consumers prefer a payment experience that matches what they want. 46% of consumers told us that if that particular merchant didn't offer the payment experience they were looking for, they went somewhere else. So our consumers are now telling us that the payment experience matters. So we're going to cover some major findings here, and the first one that I'm going to show you is all around, again, the mobile experience. So if you look to the right, real quick, you'll see that the first 3 items are, again, an online native shopper, a mobile experience, mobile with brick and mortar. And all 3 of those segments said that if there was digital in any of those experiences, you can see 88% approval, 86% approval, and 86% approval. Very good in those areas. Where it was not so good was only 60% of the customers that shopped pure brick and mortar found satisfaction in their shopping. So again, our consumers are telling us they prefer digital. They want us to meet, when I say us, they want merchants to meet them where they're at, whether it's on their phone, Whether it's a wearable device, whatever it may be, they want us to meet them where they're at. If any of you have been to Disney World recently, I actually had that experience a couple weeks ago. The entire experience, I was able to leave my cash, my credit cards, my wallet, didn't take it to the park. Complete mobile experience all the way through, whether it was food, whether it was purchasing merchandise. I could do it all from my phone. Great experience. So a great example of a merchant meeting consumers where they're at. I'm going to now turn the rest of these findings over to my partner in crime, Lindsey.
Thanks, Josh. All right. One of the other key findings of the Global Shopping Index study was that consumers really want to have the flexibility to choose to pay the way they want to pay. I don't think that would be too surprising because most of us are all consumers as well. But it was consistently a top feature, which I think that part could be surprising. And consumers went as far to say that if they were shopping with a retailer and the retailer didn't have their preferred choice of payment, that they would not convert the order and that they would actually not go back to use the retailer because they wanted to pay a certain way. So the idea that payment is now so strategic that someone is going to shop elsewhere, it makes you see the flexibility of commerce and offering people to pay the way they want is really, really a key importance. And then consumers have also said, well, went down here. Consumers were 63% more likely to shop with merchants that do offer their favorite way. So the merchants that are offering the additional flexibility and choices to their consumers are increasing their market share and converting more orders and getting more revenue from their clients. The last part about payment that I wanted to add here is that new flows that are emerging, such as buy now, pay later, and this is where you might have an item that you're not really comfortable paying that full dollar amount right away, but maybe you want to break it up into installment payments where you can pay it over time. Some of the payment methods you might know about, Klarna, PayPal Credit, Affirm, Visa Installments, they have that ability where, say, if anyone joined Peloton Nation during the pandemic, if you wanted to go buy your Peloton, oftentimes you would get the advertisements to go buy from Affirm so that you could break up that payment over the course of several months. It allows you to kind of extend the kind of credit that you have available. And so I know a lot of my friends that did join Peloton Nation, they did it that way, and they were so excited with how smooth that experience was that they were telling their friends about it. I don't normally tell too many people about how great my credit card payment was. So when you see something smooth like a buy now, pay later, that's a new flow and it's interesting. It shows that it really does increase your satisfaction with your whole purchase, not just like the checkout piece, but the entire infrastructure of it. And with that, 43% of consumers have at least tried it. And that was a pretty surprising stat as well, because only about, I think it's from the study, it's about 55% of retailers are prepared to accept buy now, pay later payment methods. So something to think about in your future payment strategies. Another thing to think about in your sales strategies could be so much has gone into the pre-sales and the checkout experience and making that nice and smooth for customers, but now there's friction that's happening post-sale. So that could be with the order fulfillment or with the refund that's happening. And primarily with refunds, the study found that in 2020, retailers were more likely to offer like return guarantees, but they were seeing a good amount of fraud come in with all the rise into digital. So then in order to address the fraud, they were no longer addressing guaranteed refunds, and then that increases friction with customer satisfaction score. So it's something to think about. What fraud products are you running to help prevent that friction that's going to happen later to good customers? One of the other things on here that was interesting to me is that at the bottom of this the chart, which shows how ready retailers are and how satisfied or the usage gap between what consumers are using. There was a lot of retailers that started investing in voice assisted shopping checkout, and not as many consumers interested in using that yet. but less retailers were doing buy now, pay later or guaranteed refunds. And a lot of consumers are ready for that and interested. So again, something to think about is the buy now, pay laters. So as Josh said, the big takeaway was really about digital and adding that flexible commerce experience even in an in-store environment. So I don't know if anybody has gone into a situation where you're shopping in store and you bring out your phone to assist you, whether you're looking up for reviews of a product or you're looking up different price points or if there's any coupons online, but you're now kind of marrying what used to be traditional in-store with the digital experience. And if you do that as a consumer and the retailer you're shopping from has something baked in to really like meld those two experiences together, your satisfaction increases. So those trends that started in 2020 by force are here to stay. We're going to see the continued rise of the online shopper, the mobile natives, and digital first is no longer an option. It's something that everyone needs to embrace because it's what increases customer satisfaction, which increases revenue. And then the last thing that I want to point out with this one is the ability to offer the right features is 100% important, but just as important is the ability to offer them easily and looking at your technology stack of how you're going to deliver these choices out to the market to increase more conversion rates and more sales. So making sure that you're looking at using partners that can help facilitate these experiences for your consumers. And so with Salesforce and Cybersource, we are partners that can help deliver these experiences to your consumers. We've been long-standing partners with B2C. If anyone goes back to Demandware days, I know we're not supposed to use the D word at the Salesforce conference, but that's what our heritage has been. We've since invested more in Salesforce Stack of releasing integrations that help support with B2B, commerce, with order management, thinking about that post-sales experiencing, wanting to make that nice and smooth, and subscription billing, and anything we can do through the partnership to help reduce that friction and convert more orders is what we're aiming to do together as partners. And with that, I think I'm on time for questions. Any questions?
It looks like they've got a mic, so if there's any questions, please feel free. The other thing that I would just add, that as we've talked about this experience, this digital experience, many merchants, consumers, providers get a little bit intimidated by this whole digital experience. We have to remember there's simple things that can help with it. Simple things like card on file, that now all of a sudden customers have a frictionless way to work with merchants. There's other things of just simple mobile readers. All of this great technology that we're putting out there can be simple. And so it's also incredibly important, the ecosystem of partners you choose to partner with, whether it be Salesforce, whether it be Cybersource, the resources are out there. It's just a matter of starting to package those up and put them together to provide simple solutions to consumers. All right, any questions? We've got one in the back.
Lindsey, Josh, thanks so much for walking us through the digital index. We've had a lot of questions today about global fraud. Can you kind of explain what Cybersource offers in terms of fraud solutions to help protect customers?
Yeah. So Cybersource is a payment management platform. We specialize in payment acceptance, fraud management, and payment security. And with the fraud management piece, we kind of have, I'd say, 3 flagship products. One of them is called Decision Manager, where we're taking in orders and looking at about 260 attributes in real time and using AI and machine learning to say this order should be accepted, rejected, or further looked at. And if it should be further looked at, that's where we're using our fraud management tools within our portals to help somebody further review an order of additional information and decide if it should be accepted or rejected. The purpose of the tool really is to mitigate fraud on the front end and look at preventing fraudulent orders from passing through. So then when you're looking at those kind of post-sales experiences again, you're not needing to do we're not going to do refunds because we're worried about it being a fraudulent order. So it's really about protecting from the front end. And that is a tool that's available globally. And then we also have consumer authentication or 3DS 2.0 to help authenticate in advance of the order before it goes through that somebody is the consumer they say they are. And so we're looking at those attributes. And what we've seen with consumer authentication is that it's passing through to the banks and they're getting more data about the consumer and more likely to accept an order. So your auth rates are increasing as a retailer, which increases your sales and profit.
So in a nutshell, Lindsey, we're helping merchants and retailers let the good transactions go through, keep the bad ones out, and we're not causing friction if we get it right using Visa's data.
Yes.
We get it right, we now provide those consumers with a seamless experience, not letting, keeping the bad guys out and letting the good ones go through.
Exactly.
Question here. Why is it important for, I know we're talking about digital shopping. Why is it important to think payment platform as the first step into getting the digital piece right?
Great question. So as we saw from the shopping index, payment choice and flexibility of choice and being able to pay the way you want to pay is now strategic. It's now impacting customer satisfaction and it's impacting the conversion rate in your orders, so that's increasing your bottom line and profits.
I have one last question for you guys. In terms of banking relationships, we've had a lot of questions come up where merchants are trying to swap from one e-commerce platform to another, but they're realizing they want to keep their relationship with their bank or their acquirer. Can you guys explain why it's important to think about payments first in terms of the banking relationship and the acquirer agnostic aspect of it?
Yeah, I can start with that.
Go ahead.
You can add in, Josh. So Cybersource is payment agnostic, and even though we do also have preferred technology partners like Salesforce, we are also technology agnostic. So if you want to continue to work with a banking partner and switch out your front-end e-commerce platform and maybe come on to Salesforce, you're welcome to do that by keeping Cybersource in the middle. To plug in the different pieces, you can do that as you also scale internationally. Say you wanted to use one bank in the US, a different bank in Europe, a different bank in Asia. You're welcome to do that because we're going to plug into about 196 countries around the world and process payments for you. Anything you want to add on that one, Josh?
No, I would say also too, the other thing to keep in mind is your front-end processor as well. It's important to know that you've got options there, and so we're connected to about 150 processors across the globe as well.
So payment ecosystem of being in the middle and connecting all the different acquirers around the world to all the different platform technologies that you want to work with to help power the user experiences you want for your customers. That's one of the values we bring to the table is an ecosystem of pretty unparalleled tech partnerships and acquiring partnerships together.
All right, time for the raffle. So Sean, drum roll. All right, Lindsey, are you going to